Hi, for those of you who don't know who I am, my name is Josh, and I'm part of the Good Brothers Trading Academy. And today's lesson is going to be on what stocks to trade while starting out. Now, I'm brand new to YouTube, so if you could please hit the like button and subscribe. Don't forget to turn on the notification bell. That way you can be updated every single time we upload new content. Now, this is a topic I'd like to get into, and the reason why is because there's a lot of misconception out there in the marketplace, especially with new traders. You see, when we're first starting out, we seem to be attracted to the lower cap stocks, generally because we don't have the capital to feel like we can trade the bigger cap stocks. I've seen this over and over. Um, I have Netflix up, for example. It's trading right around $500 to $550, and then I have AMRN, and it's trading roughly around $7. Okay, so generally, when we only, for example, if we have $1,000 in our account, we would be more likely to try to buy AMRN because it's cheaper. And if, for example, and if Netflix is, for simple math, trading at $500, let's try and break that down. At $7 divided by $1,000, that equals roughly 142 shares. And if we do the same with Netflix, where we only have $1,000, how many shares can we buy of Netflix? We can only buy roughly around 2 shares of Netflix. Now, this is the concept that I want to talk about. What we need to look at is we want to measure our accounts not by the dollar value we're growing it. This is almost like keeping up with the Joneses or something, okay? So we don't want to look at other YouTubers and say they made 500 bucks a day, 1,000 bucks a day, or I want to make $100 a day so I can replace my income or the 9-to-5 job. The way we want to look at it and how we're going to become more successful is by percentage growth in our account, okay? So instead of worrying about what size of stock you're trading or if it's too expensive for you, we need to measure out percentage growth. And how we do that is there's every trading platform, we have tools to measure our expected move was or how big the actual move was. So if we just take Netflix, for example, and we use our software measuring tool, right now we can see that Netflix moved 3% in a day, okay, or $15. And if we take a candle from AMRN and we do the same thing where we're measuring from the very top to the very bottom on the size of move that it put in on this particular day, it moved around 3.8%, okay, but only around 26 cents. So we can see that the dollar value doesn't seem to be moving very much. It's moving by pennies, which makes sense. But what we want to do is focus on percentage growth. So if we continue to look through this, this is a $500 stock. We can only buy 2 shares. It moved 2.5% this day. It moved 3% this day. Moved 3% this day. And if we go through AMRN, it moved 2%, 2.8% that day. Moved 2.7%. Let's click on one of these bigger days. It moved It moved about 6.5%. 3%. Let's click on this large day, and it moved about 13%. Now, if we continue to go through and we measure all these other candlesticks, and this is what I want to point out is, what stock are we going to be picking to trade? What stock do we want to trade, right? So this, on today, for Netflix, moved 11.5% or 56 bucks. So you can hopefully see where I'm getting at. If we have $1,000 and we're investing that full value or the full dollar amount in that particular trade. If AMRN is trading at 3% or 4% a day, let's just say 5%, we have a full $1,000 invested in it, we're going to make 50 bucks in that trade if we catch a 5% move. If Netflix, for example, only buying 2 shares moves 5% a day of $1,000, we're still only going to make $50. So what we need to do is, for example, like Zoom, which would be ZM, this is known to be a pretty nice mover. Zoom yesterday moved roughly around 8%. On this day down here, it moved 7%, a little over, 7.5%. One of these smaller days, 2.5%. Now let's go to Roku real quick, which is a cheap a cheaper stock. Zoom's trading upwards around $460, and Roku's trading roughly around $200 today. But let's look at Roku on how big Roku moved. Roku put in a 12.9% move today, or $24 on this stock. That's a big move for Roku. Let's go to maybe a little bit of a smaller candle. 9% or almost 10% on this day. Let's go to even a smaller candle, 6% and 4.5% or 4.8% on these smaller days. So what I love to look for is I love trading Roku, for example. Roku puts in wonderful moves. It grows the account very quickly. And let's look at even a cheaper stock like MU, for example. Now MU from top to bottom today only put in a 3.8% move. Okay. Now let's find a larger candle. It put in 5%. And then let's look at one of these smaller candles. 1.4%. So a stock that's trading at $50 or $48, or if you look all the way down here at these some of these lows at $42, the stock, yes, you could buy more shares, but you're not growing your account faster. So I suggest on when you're looking for a stock to trade, now if you find one that's super volatile, like Shopify, for example, Shopify puts in big moves. Tesla puts in big percentage growth moves. So you want to be careful. Obviously, if there's a lot of volatility and you're being able to grow your account very quickly, you can also lose money very quickly as well. So you want to find a stock that you're comfortable with. So the point is you don't want to get scared of a $500 stock or a $150 stock. You don't have to sit there and trade $20 or $30 stocks. Going with the bigger cap companies, the blue chip companies, stocks that have a lot of volume pre-market, and we know that there's percentage growth there, and we know that they're popular stocks, is sometimes the better way to go. We know that we can buy low, and they're going to generally have some sort of a move in the upwards direction to help grow our account. We want to stick to those stocks that grow 3.5 to 10 to 12%. We want to stick to looking at trying to grow our accounts 1.5 to 2.5% a day, especially when starting out and we're only being able to take 1 to 2 trades per week or trying to stay within the PDT rule. If we can take this approach in the market where we're focusing more on the percentage growth in our account rather than the dollar value that we're growing the account, this is going to help us scale our positions. For example, you will be able to track your consistency a little better. Instead of saying that I want to make $100 a day, what if you made 1% a day? And you made a 1% on $1,000 a day. Now, when you start to scale and you're looking for that percentage growth, now you're trading with 2,000, 3,000, and you finally passed, which is a great accomplishment to anyone that starts with a small account and gets past the PDT rule. Once you start trading upwards around $25,000, you can still grow the account 1% a day to 2.5% a day. Wouldn't that be a great accomplishment? And then your dollar value will just continue to go up as your account grows. Being focused more on the percentage growth, this is going to help you fine-tune the stocks. You're not going to be as confused when you're looking at if you're taking 30 cents in a trade, $1 in a trade, or a few dollars in a trade. Imagine going with a cheap stock like Micron or MU where you're buying in at $40 and you're used to trading Netflix that moves $5, $6, $10 in a day, $15 in a day, and you're waiting for Micron to put in a dollar move. It might take all day to put in a dollar move with Micron. So you want to definitely be looking again at the percentage growth factor. If this approach makes sense by percentage growth in the account, write percentage growth or just growth in the comments below. And if you have questions, this is also where you can ask them. I'd be more than happy to answer any questions you guys have. And if you haven't already, please hit the like button and please share this video if you know anyone that could use this information. I'll see you in the next video.